Trump's tariffs are crashing the markets. But what if that's exactly the plan? This isn't a trade war, this is a financial reset. And Bitcoin is at the center of it. Trump just launched the largest tariff wave in US history. Markets tanked, S&P down, tech crushed, and Bitcoin did dip. But this was just Act 1. Trump called them reciprocal tariffs, but here's the truth. They were calculated using a formula. US trade deficit divided by imports per country. Why? Because Trump was not aiming for fairness. He was solving for one thing, over $500 billion in new revenue. But this goes way deeper than trade. This is about power. The US dollar is the world reserve currency, but this privilege comes with a catch. To keep the world stocked with dollars, America must run trade deficits. We send the world paper, they send us steel, oil, iPhones. It's been the deal for decades, but it's let the US run wild, overspending, overborrowing, with very little consequences until now. Trump's strategy? Keep the dollar dominant, weaken it just enough through tariffs, force allies to the negotiating table, rebuild US industry, and cut rates by crushing demand. Trump isn't necessarily fixing the system, he's shifting the pain onto other actors. But here's where it gets wild. Tariffs crash the markets and bond yields drop. And then refinancing $36 trillion in debt just got a whole lot cheaper. But if foreign buyers step back from buying these treasuries, the Fed has to step in. That means printing, quantitative easing, liquidity floodgates opened again. Even today, markets are pricing in more rate cuts for 2025. More printing equals weaker dollar. Weaker dollar equals stronger Bitcoin. That's why Bitcoin is holding up while everything else bleeds. Trump isn't just rewriting trade policy, he's cornering the Fed into printing. And whether you love him or hate him, he just made Bitcoin even more inevitable.